Hello investors, welcome back to your number one place for all your investing needs. So today we're going to be discussing the top 5 stocks for the month of May. So these are going to be stocks that I'm going to be looking to buy right now or, potential. These are stocks that have, high growth potential currently, either due to the virus situation or just a low price for the company right now with a great buying opportunity with either earnings coming up. Now, quickly, before we get into the video, guys, thank you for tapping that like button for me. We got over 500 likes on the last video. Can we do it again and get 500 likes on this video? So don't forget to subscribe to the channel for more investing content like this. And also, if you guys want to sign up, down here we have 2 free stocks from Webull once you fund your account with $100. We have a sign up for Robinhood and you receive 1 free stock worth up to about $300, between $500 and $300. And then we have a sign up for M1 Finance as well. Okay guys, so the number 5 stock on our list is going to be ticker symbol UHT, Universal Health Realty Income Trust. So this is a real estate investing trust that invests in healthcare and human services related facilities, currently including acute care hospitals, behavioral health care hospitals, specialty hospitals, and medical office buildings, freestanding emergency departments, and child care centers as well. And also, as of February 26, 2020, they have about 71 real estate investments located in 20 states in the United States. So this company I'm definitely picking because it's a real estate investing trust that is in the medical field, and obviously with this whole situation with the virus, I feel like the medical sector is definitely needed, and a lot of money is being put into it right now, and that's why I picked this one as my number 5 pick right here for you guys to see. And I feel like not that many people actually know about this REIT. So obviously the 52-week high was $132.41, 52-week low $54.54 down here. The stock was trading at around $130, in February before all this happened. Currently trading at $100.04. The stock is down about 23% since the crisis started. They have a good dividend, so their dividend rate is $2.74 yearly, which comes out to a yield of about 2.74%. Not a bad yield at all, almost 3% yield on a stock like this. Market cap of 1.38 billion. Beautiful company to invest in. Let's take a look at their dividend score right here. Amount, obviously it's 68 cents per per quarter. And then if we take a look right here, they have their 4-year average yield is about 3.84%. So it has been, going down a little bit. It's lower and lower, but it's still a decent dividend, almost a 3% dividend. If we look at their dividend growth, they have 33 years of growth. So for 33 years, they have, been able to grow their dividend more and more. And currently it's at about $2.72 per share, as we saw. Dividend history, obviously, they're paying out every quarter, and currently it's about 68 cents. So this stock, obviously, like we said, because of this whole medical situation, a lot of these they're going to keep making money. And as we all know, real estate investing trusts, they have to pay out their, shareholders pretty much about 90% of the profits back. That's why they have really high dividend yields on these stocks, because they have to pay out, their profits back to you guys. And that is why I'm keeping this one. And I actually added this one to the portfolio recently. It's on my M1 Finance portfolio. I love this stock right now, and I'm going to keep on loading up on it, as we need this medical field. We need more hospitals. We need things like this in order to get through this. The number 4 stock on our list is going to be ticker symbol SBUX, which is Starbucks Corporation. This is an American multinational chain of coffee houses and roastery services. As the largest coffee house in the world, Starbucks is seen to be the main representative of the United States' second wave of coffee culture. So currently they're trading at about $77.87. They were at a high of about $90 before the crisis happened. So it is down about 13.5% from that high of about $90. This stock is pretty decent stock, obviously, with a lot of the chains opening up all over the world. I feel like once everybody starts moving and everything starts opening up, everybody's going to be going out, traveling, obviously working. People are going to be going to Starbucks. People are going to be going to companies like that, like Dunkin' Donuts. Everybody's going to be getting their coffees in the morning, before work, after work, during work, at all times pretty much. They have a dividend rate of $1.64, which comes out to be about 2.11% yearly. And their market cap is $90.96 billion, so a decent market cap on this company as well. Let's take a look at their dividend right here. Obviously, it's 41 cents per quarter. If we look at their dividend yield right here, their 4-year average yield is about 1.83%. So their dividend is slowly increasing or staying about the same throughout these past 4 to 5 years. So it's staying about the same, which is good. And obviously, if we get a dip in the market, it's a great buying opportunity because then your dividend is going to be worth more in the future. And then if we look right here, years of growth, so over the past 10 years, their dividend has been growing. Since 2011 right here we have, they have about 28 cents, and currently it's, giving out about almost $1.50 dividend per share every year. If we take a look at their dividend history right here, obviously it's been increasing. It was down here giving out 20 cents, 25 cents, 36 cents, and currently it's about 41 cents per quarter. So you get paid quarterly. So 4 quarters, you get paid, every quarter, obviously. So you get paid every quarter, obviously. And that is another reason, Starbucks is on my list. Everybody is going to want to get coffee once this starts. And obviously with work opening up, like we said, people are going to be going in the morning straight to get their coffee because that's what everybody does. Leave a comment below, actually. What is your favorite thing from Starbucks if you go to Starbucks? I've only been to Starbucks like 1 or 2 times, so I don't even know what they have. I like all types of coffee, so leave a comment below. What's your favorite Starbucks coffee? Okay, guys, so the number 3 stock on our list is going to be ticker symbol HD, which is Home Depot. So the reason we have the Home Depot on here is obviously Home Depot is the largest home improvement retailer in the United States, supplying tools, construction products, and services to, the customers. Home Depot has earnings coming up in the next couple of weeks, actually, and I believe that earnings are going to blow it through the roof. Obviously, everybody is trying to do some construction on their house or painting the house, do some type of activity. Since they're trapped in the house, they're quarantined, they cannot leave. So everybody is out there. If you guys go to your Home Depot, or if you've seen the Home Depot, if you've been there, lines are out there. There's lines every single day. There's lines at Home Depot. People are in and out real quick. They're getting whatever they need in order to keep themselves busy, because people are busy and they want to spend money. They don't want to just sit inside and do nothing. And right now, Home Depot is about -5% from the high that it had in February before all of this. It was trading about $247, which was the 52-week high, actually. It went down all the way down here to about $152, and now it's slowly recovering. We're trading at about $234.43. Their PE ratio is 24.45. They have a dividend of about $6 per year, which comes out to be about 2.56%. That is an amazing dividend. Now, this stock, obviously, I'm definitely going to be looking to add to my portfolio, because that is a very, very decent dividend for a company like Home Depot. Like we said, Home Depot, I mean, this is a great company. It is the largest home improvement retailer in the United States. So why would you not have this one in your portfolio? I'm definitely going to be looking to add it to mine. Their market cap is $251.81 billion. If we take a look at their dividend, it's obviously $1.50 that they're paying out per quarter, and their 4-year average yield, it's been increasing or staying about the same, around the 2% area throughout the past 5 years. If we look at their dividend growth, they have 11 years of growth. So for 11 years, Home Depot has been able to grow their dividend. Down here, they were only giving out about $1 in 2011, and currently they're giving out about $5.44 per share, or a little bit higher actually now. If we look at their dividend history real quick right here, obviously they were paying out about 69 cents per quarter. Currently they're giving out about $1.50 per quarter, which comes out to be that $6 like we mentioned earlier. The dividend safety right here, if we look at that payout ratio, the payout ratio is about 40%. Currently it's at about 62%, not too bad. But yeah, definitely Home Depot is another one to keep an eye out on the list, especially with earnings coming up this month. Something to look at. I believe that earnings are going to blow it through the roof, and especially this and the next quarter, because of this whole situation. So definitely one to keep an eye out on, and maybe grab some shares. Okay, so our number 2 stock is going to be ticker symbol SO, the Southern Company. So this is an American gas and electrical utility holding company. The company is currently the 2nd largest utility in the United States in terms of customer base. So before we get, guys, into this one, make sure you smash that like button like we said if you haven't already. Let's try to get over 500 likes. Make sure you subscribe to the channel for more videos like this. Dividend investing, penny stock investing, growth investing, all types of videos like that. But anyways, this stock is currently down about 20% from the highs right here in February. It was almost about $70 per share. Currently it's trading about $55.41. The stock is not bad. It has a PE ratio of 17.68. dividend rate of $2.56 per year with a yield of 4.62%. That's a nice dividend yield to have in the portfolio. I mean, 4.62% dividend, not bad at all in my opinion. Their market cap is 58.51 billion. Obviously, this is, like we said, a gas and electrical utility holding company. So people are home right now. People are using utilities and electrical services. So, they pay out about 64 cents per quarter. Their dividend yield, the 4-year average yield, is 4.89%. So it's been staying about that 4%, 5% area. Dividend growth, obviously, they've had very, very nice dividend growth. This is actually really nice for a gas and electrical utility company. 18 years of growth, that's pretty impressive in my opinion. 18 years of growth, currently, like we said, $2.46 per share. Their dividend history, if we take a look right here, obviously they've been paying out every quarter. They're paying about 64 cents every quarter. Payout ratio right here, their payout ratio is about 81.66%, so stayed about 70 to 80 range right there overall. But this company, definitely one to look at. It's dropped more than 20%. I mean, down here it was trading about $43 per share. But if we take a look at their 10-year chart, I mean, the company just exploded pretty much since 2019. Right here, we saw this growth from about $46 per share to all the way up here about $70 in the year 2019. So this one, very, very high potential, decent dividend to look at. Something I look for is growth, obviously, in these companies, and I see a lot of growth in the Southern company for the future. All right, guys, so the number one stock that I'm going to be looking at right here for the second week of May is going to be ticker symbol LOW, which is Lowe's Companies. So this is an American retail company specializing in home improvements, similar to Home Depot. The store operates a chain of retail stores in the United States and Canada as well. So it's very similar to Home Depot, like we said. Very similar concept that I'm looking at. Home Depot, everybody's going to get things to improve their house. Same thing with Lowe's. Everybody's going to do the same type of thing. Home improvement. Home improvement is the thing that people can do when they're on lockdown. That is the only thing that they can do inside of their house. So obviously, if you're home and you have nothing to do, you're going to go to Home Depot, you're going to go to Lowe's, and you're going to get stuff to improve your house. That's why I definitely am looking at both of these companies, especially since Lowe's has earnings coming up as well. I believe it's either this week or the following week after that. So Lowe's company, they're down about 9% from the high right here in February of $126. They went all the way down here to about $65. That was a great buying opportunity for anybody that got in at $65. That was a steal. Currently, it's trading at $114.23. Their PE ratio is 19.50, and then their dividend rate is $2.20 per year. Their dividend yield is 1.93%, so almost a 2% dividend yield. It's a little bit lower than Home Depot, but you got to look at it, in that way. I think that Home Depot is a bigger company, in my opinion, than Lowe's is. Their market cap is $86.24 billion. And then if we take a look at their dividend, obviously, most of these companies have nice dividends. The dividend is 55 cents. And if we look at their 4-year average yield right here, it's about 1.82%. So it stayed steadily about 1.5%, almost 2% dividend. So not bad. If we look at their dividend growth right here, they have years of growth, 56 years of growth. That is very, very impressive. If a company has over 50 years of growth, that is amazing. This company has over 56 years of growth. Amazing company to get in my opinion. Definitely another one I'm going to be looking at to add to my portfolio for sure. They pay out about $2.06 per year, like we said. And then if we look at their dividend history, it's been increasing. They were down here about 35 cents per quarter. Right now, it's about 55 cents per quarter. So it is a quarterly paying dividend. So every quarter you receive a dividend. If we look at their safety score, their payout ratio is about 37.55%. It's been sticking around that 30 to 40% area throughout the time. So not bad. So just like we said, Home Depot, Lowe's, two of my very, very favorite home improvement companies to own, and definitely two companies to own in the portfolio, especially with earnings coming up. I think that both of these companies are going to do very, very great this earnings and next earnings because of the home improvement sector, and everybody's doing things to improve their houses. Well, guys, I really hope you guys enjoyed the list for the second week here of May. I had it a little bit diversified. I had the home improvement. I had the real estate investment trust as well, and then we had a little bit of a mixture about StarBucks, consumer products. So I mixed it up for you guys because these are stocks that I'm looking at right now, or I'm already, buying some on, the good buying opportunity right now. Obviously, you guys do your own research before investing into any stocks. I am not a financial advisor. These are just stocks that I am looking at personally for myself, and I'm just sharing it with you guys because I think there's some good buying opportunities. Because they're either at lows, they have a good future because of the situation we're in right now, or they just have a decent dividend as well that will add up and give me some growth for the long run. But yeah, do your own research and before investing in any companies. Don't go off of anybody else's words. Let me know, guys, in the comments below what stocks you're loading up on in May. Leave a comment below, obviously. Make sure you smash that like button for me. Don't forget to subscribe to the channel for more content like this. I make videos about dividend investing, growth, blue chip stocks, even penny stocks, and I show you guys my journey to growth, to trying to get that passive income life where I won't have to have a 9 to 5 job anymore. And yeah, so if you guys enjoyed this, I hope to see you guys next time.